So in terms of commercial and my feelings on it and how I'm doing and what I'm buying, we've lost 0 commercial tenants due to COVID. In terms of that, I think I'm more confident than I've ever been, and we're very, very happy. Taking the leap of faith, getting your first investment. If you're not gonna live close to it, at least have a plan to have you or perhaps a friend or family member very close by so that you can watch it and ensure that things go well. And so I got started in Owen Sound. I love Owen Sound, I believe in Owen Sound, and at the end of the day, I find myself knowledgeable and equipped to continue dealing with whatever affects me. And I can tell you, if I were to just buy a property in Toronto and not buy it with my eyes open, I wouldn't be ready for some of these potential pitfalls, right? That you only get to learn about once you're more experienced.
What is up, YouTube? Matt McKeever here, and in today's video, we talk mixed-use buildings with Jon Kepler. So we've actually done a video on this in the past, but that was in the pre-COVID era. So in today's video, we're going to be discussing what's the deal with those mixed-use buildings during COVID, and assuming we ever get to a post-COVID world, we'll also explore that. But essentially, what we really want to get into is, do the rules of thumb that we used to use for mixed-use buildings still apply? So that's what Jon and I discuss and more in today's video. What is up, YouTube? Matt McKeever here, and I've got Jon Kepler back. It's been a while, Jon. How's it going?
It has been a while. It has.
So today we're going to catch up on just commercial real estate. So if you guys don't remember, Jon and I think we've maybe shot a couple videos now just talking about commercial real estate, and even that sometimes can have different fuzzy definitions. But I think for the purpose of this, what we're talking about is either properties that are rented to commercial tenants or that have a commercial component. So maybe commercial on the main floor, residential above, very common, especially in downtown cores and things of that nature. So I guess before we jump into it, because it's been a while, let's just share some of our perspective or context. So I'll go first. For anyone that's interested, I guess last time we talked, I own no commercial real estate. Since then, we bought a couple buildings that have commercial on the main floor and then residential above. So I think we've got 4, maybe 6 total commercial units right now, and I think 2 of them are rented. So that's my personal experience. However, the buildings we bought, the ones that we've got vacancies on, we bought them vacant, so it wasn't like it was a big surprise. And we'll explore that more in a second here. But Jon, do you mind just breaking down for the audience what your experience has been so far?
Sure. Well, at the beginning of my career, my first purpose-built apartment building was mixed use. And it was a 3-story with a store on the first floor. So at that time, I suppose I was really betting on that store working, and fortunately it did. 11 years later, it's still there. Nice. And I've always been cautiously optimistic about commercial real estate because vacancies can be challenging to fill. And when COVID first took hold, I think people were worried that commercial was going to take a bath. Yeah. People were worried about major vacancies, shutdowns, especially some of the most vulnerable business types, which I think everyone probably agrees is restaurants. Yeah. And so I've always been cautiously optimistic. I think when everyone said that COVID needed to make you more hesitant, I read that and considered whether or not I should also be more hesitant. Though in reality, we've been quite happy. Truly, everything's been very, very good. We've had no major tenant losses, no major commercial disasters, and our last 2 acquisitions have been, again, those mixed-use properties, 3 stories with stores on the first floor and apartments above.
Gotcha. And so I guess before diving into really what's going on in the market today, the last time we talked about this, I shared kind of a general rule of thumb I often hear amongst real estate investors. It's one that I follow as well. And that's the idea that you want the commercial to be like the gravy or the cherry on top. It's the profit, but you don't necessarily want the commercial units in your mixed use building to be necessary to break even. And so I'd love to just hear, again, what your original opinion was on that and if it's changed since COVID-19.
So my original position, which is, again, becoming more and more dated at this point, was exactly that, and maybe even to a larger degree that you would need to cash flow, that you could almost ignore the commercial. Gotcha. I think with 1 or 2 of our best deals, the goal was almost to pretend it wasn't there. Or even just to run it vacant on purpose. If you run it vacant on purpose and you hit all your numbers, the only real way to even tell is that your property tax bill is higher than it should be, and you kind of wonder why. So with lower caps and more investor interest in recent times, I don't think that's quite as realistic, but I also don't think it has to be. And again, the farther along we get, the more investments we make in these mixed-use buildings that have a commercial component, the more faith I get. And also the more of an ability that we have to stomach certain challenges. So when we had a building with exactly one commercial space, we needed that space to work. Now, if we were to have an extra commercial vacancy, it would, the hit to our cash flow month to month would be spread over all the properties.
Yeah, and I think that is important to understand that especially when you're getting into these maybe more volatile type of assets where, again, it might stay vacant longer, but once you lock someone in, maybe they stay longer than your average residential tenancy. But understand that volatility, when you can spread it out over large numbers, it feels a lot safer than when you're taking it on just like one of one, 100% occupancy or 100% vacant. Right. So with kind of your evolving thought process, are you warming up more and more to commercial right now? Have you paused it? And actually, I'm going to take a step back. Last time you were on, I think we were talking about looking at buying malls. Is that still on the drawing board? Have you paused that, or is this the best time ever to buy malls?
Yeah, let's talk about that. The mall thing is interesting. So in terms of commercial and my feelings on it and how I'm doing and what I'm buying, we've lost 0 commercial tenants due to COVID. We filled a commercial vacancy, kind of a more longer term vacant unit, filled it during COVID. So in terms of the real estate that we've got, the commercial real estate and the type that we buy in terms of the mixed use buildings, with 1 or 2 stories of apartments above. In terms of that, I think I'm more confident than I've ever been, and we're very, very happy. In terms of malls, in terms of a different layout where you have perhaps no residential component at all, and again, you have, it's a covered mall, right? So you have all these leasable spaces that have no frontage at all. So there's, from the street, no one really knows they're there unless they read the sign. So I think that is very different. Malls that have interior space are admittedly subject to shutdowns, as we've all learned. The one property, the mall that I was looking at, that I was looking through that deal, so that ultimately sold to another party. They are very large. I haven't checked up on them in the last couple of months. So I presumed they were large enough to handle it. I think that they have handled it. I think they've, no disrespect to them, but I think they've probably had challenges with their other properties as well, because they own a lot of this stuff. They own a lot of what I would consider to be vulnerable commercial real estate, even outside of my investment area, just elsewhere in Canada. And so, so it seems painful, but they seem large enough to weather it. They've been getting through it. But I'm quite happy that we didn't own that asset. Yeah,
I appreciate that, because also I think that this would have occurred after we last spoke, but there was a moment in time right before COVID, me and my business partners were about to buy a hotel, or like a 30-room, 32-room motel, hotel, whatever. And I was just like, guys, I don't know if I want to get into a new niche right now. And like, I was kind of the wet blanket that put a stop to it. And then like literally a month after we walked away from the deal, COVID hit. And so I suspect that, had you closed on the mall, you probably would have just fought your way to survival, right? But it probably would have been an interesting and volatile experience for their first mall ownership.
Oh, absolutely. Well, you're always most levered up at the beginning, most vulnerable at the beginning of your deal. That's when things have to work. And just based on when we were looking at it and what month that was, there wouldn't have been much time before COVID. I mean, it was an enormous property anyway. It would have had the potential to disrupt everything else that we've had going on. So it's much better to bite off smaller chunks where you have a margin of safety, and where your existing properties can kind of provide a buffer as you work on the new property and kind of stomach that risk. In terms of, again, the properties that we do own and the style, meaning properties that have street frontage and signage and where customers can directly walk in from the outdoors, I've been really impressed with how resilient everyone has been. Even the business owners themselves, when they are retail stores, sometimes we have offices as well, but businesses have been quick to give their customers ways to peruse online, but then they'll either buy via delivery or buy via curbside pickup. And so I've noticed that there are ways during COVID that business owners can pivot. Of course, none of us had this planned out before COVID, but as it turns out, there are lots of ways for business owners to pivot and keep things rolling, keep things working. And I think that having kind of let's call it a pavilion, you know, an interior space, a mall style floor plan, it only makes it harder. There's there are no COVID benefits to doing it that way.
Yeah, absolutely. And so I guess trying to take a bigger picture here, do you think, is there something unique to the type of properties you're investing in these like larger towns or small cities versus buying mixed use in Toronto or London, Ontario or Hamilton? You know, do you think, is there a dynamic difference there? Is it all just situational? Like, you know, real estate always depends upon the location, but do you think, is it more resilient in these smaller towns, or do you think that holds true for these mixed use buildings anywhere?
So resiliency is an interesting question, because on the surface, you would say, well, Toronto is where the wealth goes. Toronto is perhaps where immigrants most prefer to land and live. And isn't Toronto, you know, Canada's #1 growth source, other than maybe Vancouver? Yeah. So there are all these kind of allegations or thoughts that are floating around, but then there are some corresponding hazards under the surface that people don't mention right away. One of them is property taxes, which again don't seem to be too problematic for any of us in our markets one way or the other. But then in Toronto, you get situations where there's a building that is smaller than surrounding buildings and it gets assessed in terms of its highest and best use. So you have a building that is maybe 10 or 15,000 square feet, but then they basically get assessed as a property that could have been a condo development. And then you read about their property tax bills tripling. I think I read about one even going up by a factor of 5 or a factor of 6. And so again, on the surface, you think, well, Toronto, sure, maybe the cap rates are lower, but the cap rates are lower because it's going to be more of a growth market. And then there are these complications. And so I got started in Owen Sound. I love Owen Sound. I believe in Owen Sound. And at the end of the day, I find myself knowledgeable and equipped to continue dealing with whatever affects me. And I can tell you, if I were to just buy a property in Toronto and not buy it with my eyes open, I wouldn't be ready for some of these potential pitfalls, right? That you only get to learn about once you're more experienced.
Yeah, appreciate that. And so for someone that's maybe looking to invest either in Owen Sound or maybe a town like Owen Sound, any thoughts or tips for them to go eyes wide open into that sort of transaction, especially with a mixed use building?
Well, again, I'm managing from afar at the moment, right? We've talked about that in another video. But I do think there is something to be said for taking the leap of faith, getting your first investment. If you're not going to live close to it, at least have a plan to have you or perhaps a friend or family member very close by so that you can watch it and ensure that things go well. One thing I like to say from time to time is that things that end well do tend to start well. I know that overcoming adversity is a natural part of almost anything you do, but you really do want your first one to go well when you're a little less experienced. And so, again, even though I don't live close to my properties today, I do think it's important to perhaps manage a property that you live close to and just ensure that your first couple of deals are, you're doing the best you can in your first couple of deals, and then you can build from there and get a little more creative.
Awesome. Yeah, I appreciate that, John. I guess any other last minute tips or suggestions before we wrap up this video, just in regards to getting into that first commercial deal or that first mixed use deal? I know you've used a lot of like creative financing, vendor takebacks, things of that nature.
I did. Well, you know, the world is evolving and changing at a much faster pace due to COVID. So it's actually more challenging to give people, you know, tested, tried and true advice when things are so much in flux right now. Again, the first purpose-built apartment building that I purchased did happen to be mixed use, and I was able to get a second mortgage, a vendor take-back mortgage in second position to help me close on that. I don't know if that's necessarily as easy to arrange today. I think in today's environment, it might be a little more it might be a little better, a little less risky to buy a property that doesn't have the commercial component as your first deal. Perhaps maybe a fix and flip, or if you don't flip, maybe you fix it up, rent it out, a BRRRR, basically, BRRRR strategy. And just basically get some sort of volume of apartments in your portfolio, kind of in your back pocket so that when you take your first commercial leap, you're not going to basically pass or fail your whole business based on how the first commercial deal goes.
Yeah, I appreciate that. And it definitely can be a lot easier breaking into the residential, do 1 or 2 small deals just to build up that credibility, right? As well as confidence in yourself. Because again, commercial, you're dealing with different types of leases. It's a whole different world. It can be great for landlords, but again, it's just important you really understand the context of the situation.
One thing I will say, and I don't know if I believe this quite as strongly as some other people do, but the thought is that commercial can be less management intensive. So again, we were talking in another video about some property management and property management headaches. So a lot of investors, once they get a significant amount of multifamily under their belt, they feel that it can be rewarding to go deeper into the commercial aspect, just so that they don't have to continue hiring property managers, and just so that they don't have to deal with so many people's personal residences, right? You deal with more stores and offices, fewer apartments, with kitchens and bathrooms. And so, so some people do believe that. Again, we have a mix, so we're not going to go light on our property management no matter what we're doing, because we still have a number of apartments. But as you grow, I think that is a way to add, commercial is a way to kind of add a different asset type into the mix and maybe balance out your management a little more, balance out your business.
Awesome, appreciate it. And so you'll continue to look at mixed-use buildings into the future? Yes,
we bought a little faster than we intended to in terms of the mixed use. Just because the deal flow has worked for us, and they've been what's coming, and it's all been working. But yes, the idea is mixed use, but with a lot of multifamily as well.
Gotcha. And so if people want to follow along with you, Jon, on your journey, where can they on social?
So Instagram is probably the best place to reach me. I guess we'll write it in my handle in the description. And I haven't been overloaded quite yet, so if someone DMs me on Instagram, I'll get back to them.
Awesome, appreciate it, Jon. Thanks again to Jon for taking the time to shoot this video. If you guys got value from this video, smash that like button, hit subscribe if you're new to my channel. In the video description down below, we'll have a link to the previous video on this subject that Jon and I shot pre-COVID, so you guys can check out both of our opinions pre and post-COVID.